Good evening, everybody. Thanks very much for joining us again. It's much appreciated. Tonight, what I want to talk about is technical analysis, but concentrating on European indices and ahead of the ECB meeting and how that actually fits within the global equity markets at this time. So moving straight on, I think there are some pretty clear questions that we need to ask ourselves about European and global equity markets at this time from a technical perspective that I think are going to be very important as we move forward following the ECB announcement and the reaction to it. I mean, the first one, having seen the sell-offs that we have of late, is, are bullish trends over? Are we seeing clear, confirmed reversals to what have been some pretty prolonged and sustained upside moves, and whether or not these trends are ending and we can see more significant selling pressure beginning to develop? Is the latest activity simply a consolidation within these uptrends or a reversals? Well, this obviously links and depends very much on the answer to the first question. But if we aren't reversing, then it's possible that the current activity is just a consolidation and unwinding of overextended upside conditions before we see fresh support and breaks to new recovery highs to extend what are still bullish trending conditions. What does this mean, obviously, for the directional risks in Q4? And can the ECB trigger the next significant directional leg? Well, that is obviously a potential, and there may be or maybe not a surprise coming up with the announcement. But the reaction to that announcement is going to be very important for the next trend, be it to the up or to the downside, and how we actually perform into Q4 and beyond. Okay, so let's take a look at the Germany 40 index on a weekly basis and try and answer some of those questions that we've just posed. And the first one, obviously, is, are the bullish trends over? Well, if we look at the Germany 40 index and we draw an uptrend connecting the recent lows, we can clearly see that that's been broken. We've seen a choppy period of consolidation, a failure to push to new highs, the market selling off fairly aggressively, followed by a close below that uptrend support. So you could argue that the bullish trend has been broken and that the risk is towards lower levels. However, anybody that's heard me talk about the end of a trending condition will be aware that we need to see a break below the last correction low to confirm the shift in directional risk and the ending of a positive trend. So in other words, we need to break the last correction low, which at this time stands at 15,558, which was the July monthly low. And we need to break that on a closing basis to suggest that we're now actually starting to post a more negative trending condition of lower highs and lower lows. So basically what we're tending to look for is quite an important support level coming in from this July low. But also you'll notice, and again, anybody that's heard me talk about technical analysis will know that I put a great deal of emphasis on Bollinger Bands, and particular the mid-average in terms of support and resistance level. And we'll notice that that mid-average has turned down, which tends to suggest that we're looking at a downtrend or a more extended downside move. And that stands at 16,019. So we would have to see a close back above this mid-average to suggest that we could see a more sustained upside move. But the fact that we've been held by that average and turned lower continues to place focus on this July low and the importance of any closing break of that level to suggest that we're now starting to see this as a reversal pattern. Now, if we were to break lower, what we'd be looking at in potential in terms of the next main support points? Well, this is a clear example of when Fibonacci retracements come back into play. And we take the significant low from the recent lows up to the latest high and run the set Fibonacci retracements on that. So the 38% level stands at 14,783, and that would be the first main support point on the weekly basis that we would have to see as a potential support area. If that starts to give way, then we could even look for the deeper midpoint, even the 62% level. But if we do start to see this July low giving way, then these would be the next focus from a longer-term weekly perspective as the important supports within extended declines while we're below that mid-average. So let's take a look at the daily chart, and this is the low that we were looking at, the July 7th low, just recently on the weekly basis, on the weekly chart. And you can see that we've consistently tested that area, but have successfully held and closed above it to create a bit of a choppy consolidation area. And this really, from a technical viewpoint at this stage, isn't really that clear in terms of directional risk. And that tends to develop the themes that we're looking at a more choppy sideways period and really looking for evidence of the next significant directional move. Well, as we've said from the weekly perspective, this July 7th low is the critical closing support, and that starts to give way, then we could be looking at a deeper sell-off. What's the daily chart telling us to really sort of help support any directional themes that are emerging? Well, the MACD on a daily basis is below its zero line. So that tends to highlight a downtrending condition as well. And we're starting within latest activity to see the potential of momentum turning down again within that bearish trend, which in itself could reflect more negative themes beginning to emerge and the potential for pressure to build on this July 7th low, with closing breaks and more significant deterioration. But what on the daily chart is highlighting the resistance area? Well, it's the 15,858 July 7th recent high that we posted at the end of August. And that would be the significant point to watch in terms of resistance focus. So just to highlight, if we do start to break lower, that we may well be looking at these longer term retracement points as the potential of the major support levels if that July low starts to give way. Okay, so how does this fit within the other global indices? And I'm using the US 500 index as a bit of a proxy here to highlight global indices, or certainly the US indices at this time. And we can see that on a weekly basis, the picture is still more constructive than we've been looking at in the Germany 40 index. We're still above the rising Bollinger mid-average, although the potential is that this bounce could be a weak test of the previous high and failure level. So until we start to break to new recovery highs, the risk of this weak test and lower high, lower low formation developing would still be very much in place. But the MACD is still above its zero line. And that tends to suggest that while we're in a consolidation pattern, the longer term themes are still more positive. And in fact, we've seen momentum cross higher within that bullish trend. So the support of that mid-average is still holding, and the risk is that we can still see the support levels risking downside. So that mid-average at 4406.96 is the important longer term support level for the US 500 index. So while we're tending to see Europe coming under more significant pressure and the potential of breaking lower and below those July lows, this really is the focus for me in the US 500 and within global other US indices in particular. So while we're above that point, we can still look for more positive themes. But if we were to break to the downside, then it's this 4210 first retracement level that would be the major longer term support point, and an area again where we would expect buyers to re-emerge. But certainly comparing the two between the Germany 40 and the US 500, there's certainly reason to perhaps look for the US markets to outperform Europe within this current backdrop. And we look at the daily chart, and that really tends to highlight, again, more positive indicator conditions. The MACD is back above zero. Momentum is rising within that positive trend. and we're still finding support and holding above the daily mid average at 4464.81. So again, the conclusion really is that yes, the pressure is beginning to build within the euro indices, but we may well start to be seeing more risks developing. And the potential is that current activities could well be forming reversal patterns within the euro indices. We do need to see breaks below those support levels. So watch the July lows within the Germany 40 index. Now, if this is the case, then the risk is that we can see deeper retracement of the October 22 to July 23 upside, and that would be very much a possibility towards those longer term support points. However, obviously a lot depends on the ECB, but the US indices are tending to suggest that they're slightly less vulnerable than their European counterparts. And even if the markets do enter into a corrective phase, we may well be looking at a more significant sell-off beginning to develop within Europe over the US, and that the US indices may well continue to outperform European markets, even if we see a more extended sell-off beginning to develop. So that's me for this week. Thanks very much. And I'll look forward to speaking to you again in a month's time.